Hello everyone, welcome to BISP Solutions. So today's topic is we'll see how equity pickup works in FCCS. So what does equity pickup means and how that company works when equity pickup is calculated, when this word comes in the picture. So when a legal company generally record their investment in other legal companies using the cost method of accounting, except where required by local regulation, then this accounting method, when applied to reporting by legal company, will be referred to as equity pickup to distinguish it from the equity consolidation method. It is applied to the investments that are made and recorded by the legal company in their legal company records. It is used when a legal company aggregates data from the companies in which it has direct or indirect ownership and reports the consolidated results. The principle behind the equity company pickup accounting and the equity consolidation method is essentially the same, but it is applied under different circumstances. To record the results of equity pickup, the holding company's share of the change in the owner's equity for the period, generally profit or loss of the owned company, less the holding company share of any dividend declared, is recorded in the holding company's accounting records as income, and you have to correspondingly increase in the value of the investment in the associated company. So there's two effects will be coming into the picture. First is the holding company's share of the change in owner's equity. So you have to bring one effect in the owner's equity and in the second effect in the investment. So any share of earnings or earnings of indirectly held companies is recorded by the virtue of owned companies' reported income, which have already recorded the equity earnings of all the companies that they own. So in complex, a multi-level ownership structures, a specific sequence of equity pickup calculations is required in order to achieve the correct results. So there are some prerequisites that you have to perform. So equity pickup feature of financial consolidation and close, it is based on the following configuration settings and requirement. So the entity dimension hierarchy, it will represent the direct ownership relationship between your holding companies and the companies for which the EPU will be applied. So while coming to our application, if we check our entity dimension, so if you see, this is in North America. Here you have two different entities. One it is C101, second it is C102. Alright. So here entity dimension hierarchy, it will represent your direct ownership relationships between the holding companies for which the EPU will be applied. So this, like suppose this is my holding company, I'll define this as holding in the ownership structure. This will be my subsidiary, one will be my associate company. So likewise, and this is the parent of all those entities. The entities in the entity dimension can be identified as a legal entity. So these are all the legal entities. There's only one holding method company under each parent, and the entity currency of the holding company and the parent entity is the same currency. So the holding, suppose this is the holding company, so its currency and the parent company currency should be same. If the EPU reported for each holding company is to be identified by each legal company, in which the holding company has either direct or indirect ownership interest, then all the legal companies in the entity dimension, they must be flagged as intercompany. So you know that we always flag these if there's an intercompany linkage, so we define them as an intercompany. This was one thing. Second, you have the some seeded accounts defined in the equity pickup. When you come to the investment side, here under investment in equity companies, then you have investment in equity companies and investment in equity company equity pickup, and then equity income. This is for the equity method, and these two are for the equity pickup. So the first prerequisite is, yeah, one thing is you have these investment account and you have income also, which you'll find as the total liabilities and equity, then under total income. You can see this FCCS equity company income. So one income account is also defined here under your net income. Now you have to before you use the equity pickup feature, you must enable it from while creating an application, or you can enable it from enabling application features, that is from the configuration card. So when you come here under application and configuration, you can check whether you have enabled it or not. So while under enable features, you can find that your equity pickup is already checked. So that means this has been enabled. Otherwise, you can do it afterwards also. Here under consolidation, you can see the consolidation process is there. So under equity pickup, you can see I have set this as yes, and it will show you the different accounts that you have used. So account number 1 which is used here is FCCS equity company income, and the movement will be I have shown you these two accounts which are preceded ones. One is equity company income, second is investment in equity company. Equity pickup. The movement for both the accounts is used as FCCS movements net income, and there's one source collection account, that is FCCS EPU source. This is also preceded one. So with the help of this, you will enable the equity pickup. Consolidation members you will use as entity input. After defining all these things, we'll set up our ownership structure. You can see this is our parent company, that is your North America. Then you have this, I've set this as my holding. This I've defined the ownership structure as 80% as my subsidiary. So Prima Fitness, it is set as 40% equity. Similarly, all are there under the same parent, so if there's a multi-parent relationship, then it will affect. So this you can even define as 25%, and this becomes equity, and here you can say 15% for Canada. So there will be no consolidation will be there. So you can save changes. You can recompute your ownership data. We are doing it for FY15 Jan and scenario is actual. Coming to the consolidation process, you have some configurable consolidation rules which needs to be defined or which needs to be enabled. So coming to configurable consolidation rules, you can see some equity pickup rules, configurable rules which are there. First is your prepare source data. If you open this, with the help of this rule, it says you can prepare your equity pickup source data. It has defined that some entity as legal company, account as level 0 descendants of liability and equity. Similarly, intercompany movement has been defined, dates are source and product. If you drill down this, it says under this rule set, it says prepare source data, gather source data. The second one is consolidated EPU source data. So it consolidate EPU source data at the ownership percentage, whatever is defined in the ownership structure. Under it says reverse proportionalize and consolidated ownership percentage. Then you have reverse holding company. The fourth rule which is defined is consolidate EPU source data at ownership percentage. It is one of the same. So you have to deploy all these rules. So I've deployed the rules. Now coming to the input sheet, I've taken just one company and we'll see the relationship, and if we get the time we'll input the data for the other entities as well. So first thing is it is the holding company and this is our subsidiary company. Here I have defined all the base member the dimensions at their base members, and this is my all account column, and this is A column, it stands for the movement. So I have entered the data like this, and you can see the investment, it is there as 70,000. Okay, now coming to the output sheet, I have submitted the data. After that you have to run the consolidation. Entity C100 for period Jan, scenario actual, year is FY15. Alright, now I have highlighted this. You can see um, this is the output sheet. All the members are there at the top level for C101. This is my holding, this is subsidiary, and this is my the parent company. The relationship I have defined, I have done all the prerequisites which are required for the equity pickup processing. And you can see this is investment in sub, this is investment in equity company, and equity company income. So what does equity company, how this calculation is being done? You'll see the common stock being calculated. So how common stock gets calculated, I'll show you the calculation here under input sheet. So there's two effect. One effect comes under the common stock. We revalue two things. First is common stock, second is the investment. So whatever is the like 80% ownership is defined. So common stock of the other company, of the subsidiary or equity company, multiply by whatever ownership percentage it has holding. So like it 0.8, so 96,000 is the ownership percentage. If there is any investment, we'll reduce the 70,000 from that ownership percentage. So you'll say minus 70,000. So the difference that you will get is this minus 70,000. So 26,000 is the value. It should be revalued. Now, what will be the ultimate effect in the ultimate effect of the common stock? You can see the holding company has common stock of 158900. When it will prepare this CFS, that is consolidated financial statement, this shows 158900. It will add the revalued amount, that is 26,000. The common stock should stand at 184900 in the CFS. Similarly, your investment should be revalued at 70,000 is the holding company's investment amount, and 26,000 is the revalued amount. So that is after adjustment. These two figures should be changed. So your common stock will stand at 184900, and investment in sub should be 96,000. Or the investment in equity company equity pickup account. So common stock, you can see 184900, and your investment in equity pickup is 70,000 was there, and equity company income, it is 26,000, which is nothing but this 26,000 that we derived. So when we'll add 70 and 26, we'll reach till 96,000. So in this way you can derive your equity pickup income and investment amount and revalue the common stock. Okay. That's why it said that to record the results of equity pickup, the holding company's share of the change in owner's equity for the period, generally profit and loss of the owned company less the holding company shares, it is recorded in holding company's accounting record as income, and a corresponding increase in the value of investment in the associated company. All right, so now we'll take another method. We'll see another case and we'll figure it out. So application, we'll define the ownership structure. I think we have already done that. Coming to the manage ownership, here you can see this is holding, defined as holding. This is subsidiary, equity, and not consolidated. All right, now we'll input the numbers accordingly in the input sheet. So under C100, I've taken these two. You can take these two entities. So you have to enter the digits over here, and instead of investment in sub, you can take it investment in equity. So you can see investment in equity companies there. We'll pick the base member of this, that is investment in equity company investment. All right. So we can simultaneously take 101 has invested in 120. All right. So here you can take intercompany as 120. I think there's no 120 members, so we'll enable the equity company intercompany member. Okay, it is defined as intercompanies, that is C120. I'll go to the intercompany dimension and check for the same entity. Okay, you have this ICP C120. Okay, so instead of 70,000 you can pick 60. Okay, hit submit. So I'll enter the numbers under C120 as well. Okay, so retained earnings shows a negative amount, so which is not right. Here you can pick as 1,80,000 and then submit. Okay. Similarly, you can enter the data for C131 and quickly we'll check the result. You can find this into 1.5. Okay, so once this is done, we'll go here under C 101, 102 we have defined. Now we'll pick 120 and 131. Just copy and include the columns. Insert copied cell. Now we'll run the business rule and check for the result. So it is C100, Jan, FR15 and Jan. This is only the parent company, that is North America. So you can see equity company income has been derived. In subsidiary case, it is showing 70 only, and equity company income shows 15598. Common stock here shows under parent as 158900, but if we check the common stock, so no change in common stock. It shows 158900, that is of the parent company only. And here it shows 202948 equity company income, 202948. That means if we see, common stock shows 90,000 into 0.40% is there, that is 36,000. This minus 60,000 investment which is there in equity company, so it will give you minus 24. So 90 minus 24 needs to be done. And here also investment minus 24,000, it should give you 36,000. Yeah, so this kind of working I need to check why these numbers are not getting matched. So otherwise the result is, I'll tell you what Oracle shows you. So here you can see, suppose investment in A at it historical cost is 100, actual equity is 1000. So what you will be doing, adjusted amount what will be there, so 1000 investment amount is there, so 80% of 1000 will be 800. we'll reduce the investment because this is what we are getting and we have invested 100, so reduce it and you will get 700. So this is the net amount with which you have to give the effect. That was so investment in A will be debited with 100 and equity will be credited with 700. So equity will be increased by 7 and investment will be increased by 700. So there is an impact on both your assets and equity in the holding company. So because of this EPU adjustment. So it is showing you now the balance sheet before EPU adjustment in H and after EPU adjustment. So what you'll do, investment in A is 100, other asset earlier before the EPU it is showing earlier the investment in A was 100, other asset is 1900, equity is 2000. Now because of the adjustment, what is the effect of this adjustment? We have just calculated that is 700 is there. So investment in A is debited and equity is credited with 700. Now if you prepare the consolidated financial statement after the EPU adjustment, you will add up everything. That is earlier the investment was 100. Now because of this effect your investment is revalued, so it is 700. So the sum of both the investment is 800, other assets remains at 1900, equity is 700, and here equity is also credited with 700. Okay, so that is the same thing, right? We have credited earlier the equity before EPU was 2000, so the in CFS it will come 2700. So in this way what we are also trying to calculate it. The same calculation even I showed you here. If you see in equity company, when we have just one company we were getting the right result, but here I need to check why the results are not matching. So the common stock is 90,000. So similarly you have here defined 40% as your ownership structure, so 36,000 should come. Investment amount it is 60,000 in equity. So the difference of these two, it will come as minus 24, and now that minus 24 will be adjusted with your common stock. That is, you will add everything and minus 24 you will be doing it. Okay. And in investment in sub also, then nothing will be coming. In investment in equity company, 60 minus 24, that is 36,000 should be the result. Yeah, so just keep in mind this example. With the help of this, your equity pickup amount and investment amount will be calculated. Yeah, so that's all for today. We have seen here in this output the same figures were coming accordingly. So this is how your equity pickup needs to be calculated, and for the mismatch we will discuss in the next session. Thank you so much.